This channel is for educational purposes only. Make sure you do your own due diligence before making any investments, and there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about the market. Had a rough day yesterday. See how things play out, what that actually meant, and go into how the volatility looks. We're reaching a very critical point with that. Also going to talk about the Qs and a trade setup that developed. Before I get into all that, I want to mention later this afternoon, or maybe even this evening, Catherine Murray, I don't know if you saw the last time I did the interview. We're going to do another one. It's going to be a little shorter this time. We're going to go through some individual stocks, talk about the market, maybe a few major markets, but really talk about some individual stocks. So tune into that. Again, that's Catherine Murray, Media and Markets. That's her YouTube channel. So take a look. Let's go ahead and get into the charts. So I'm going to start with the market conditions. I'm going to talk about the trend and momentum in a minute. I want to focus on the volatility for a second. It's still above a rising moving average, and we've come to a pretty critical point here because the average true range, the red line, has pulled back to its moving average, the 18 MA, as you can see here. And each time, if you notice, each time we've pulled back to it, it hasn't been able to hold recently, at least in this year. In fact, the last time we saw a really good, even back late last year, you couldn't hold on the pullback. The last time we had a really good hold of the moving average that was turning up, we got a really hard time. We had a really hard time in the market. So I'm always on the lookout for this pattern. I look at it almost just like I would a stock, a breakout and then a pullback. And if it holds the moving average, if we get another move to the upside in the volatility here, that really increases the risk and of more deterioration potentially. So I think we want to be on the lookout for that as this plays out over the next week. Okay, so make sure you do that. And then overbought, oversold, this has dropped down. It made another lower peak. So RSI couldn't get back above the overbought line. But again, it's made a lower high, and another lower high, despite the fact that the market keeps making higher highs. I'm going to get into that in a little bit more detail here in a second. But the reality is that RSI is really continuing to show another layer of divergence. So, the potential for us to maybe come down and test lower levels, I think, could be taking place here. And then sentiment did pop. We got a move from 30 to 36% in 1 week. So I view that as somewhat of a little bit of a negative. So the fact that we had dropped down, I thought was a good sign. I'd love to see that. I would have loved to have seen that stay down or maybe just creep back up. But the fact that you get a big pop back to the upside is a little discouraging and maybe provides a little bit of a headwind here. I want to get into the individual markets and talk about the trends here. While we still have not made a lower low on the monthly chart for the S&P, I want to look at what's taken place on the weekly chart because I mentioned last week if we could get back up to 4,000 and not have MACD cross back above, that would be a little concerning to me. Well, the S&P actually reached 3984, basically, pretty close to the 4,000 mark, and it did make a marginal new high before reversing back down. And again, we have not seen the MACD turn up. And if you look at it, and if anyone who's read my book, you'd know that this is forming a little bit of a pinch here to the underside of its signal line. And that is a little concerning, especially based on the fact that we've gone to a new high. And so the new high, coupled with this divergent pattern, I kind of refer to this as a divergent pinch. And it can be a powerful signal. Maybe we're going to come back down and test this 3,700 area one more time. I do believe 3,700 is the kind of the key here. I think if we can hold 3,700, then, we're in pretty good shape. If we break 3,700, then I think we need to be prepared for something a lot more significant to the downside. Let's go ahead and look at the daily chart because I want to zero in on what took place. If you think about it,
We had pushed higher. We made a pretty strong move. Things were starting to look a little bit better. And then all we did was make a marginal new high. So this is why I don't really like to make predictions, because I like to read the price action. If we would have pushed higher and maybe made it even through 4,000, then I'd start to think that this would become support, as opposed to just barely getting through. I now consider this to be sort of like a failed new high pattern. And now we have to see if it can hold the two moving averages here around 3,900, 3,885, something like that. If we come back down through there, then you got to think we're going to get a full-blown test of 3,700 again. One thing that of note, and I had mentioned last week, the potential for, this pushing up and then the pullback would be maybe an opportunity to be a buyer. But again, now, based on the new evidence of the last 5 days, I'm not necessarily feeling that way. I mean, if it holds here and sort of proves itself at 3,900, then yes, then I might be convinced with some improving price action. But based on what's taken place here, I'm almost feeling like this is guilty until it's proven innocent. Sort of enough negative taking place, especially with the lack of green DI. Green DI couldn't even make it back above 25 this time. So that's very discouraging, even based on the fact that we made, several days up in a row, you couldn't get that green DI pushing. And this is a daily chart. So it's not like we're talking about a monthly or something like that. So it's a little bit discouraging from that standpoint. Let's go ahead and look at the hourly chart. And, so this is sort of setting up, so we talked about last week, we broke the downtrend line, and then we tested, and then we went to a new high here, and the trend was to the upside. So as I said, what we do from here, and I like to do this on the hourly chart because it gives a sense of what the trend is on the shorter time frame, and that's going to tell you whether you're going to put pressure on the longer term time frames or not. And so what I would do is, again, I would start drawing trend lines in. I'd have a trend line in here. I had that here, and then it broke it. And then instead of going up and testing and going into a new low, it actually came up, kind of fiddled around, held the 18, and then made a new high. So I'm switching this now, and I'm putting the trend line here. And then it broke it, and then this time all it did was go up and test. And then to complete the 1, 2, 3 change in trend, you needed to see this come back down through this line. That's what we saw. So now the trend is to the downside, and I would be putting in a trend line this way. So we want to do this on the hourly chart and continue to see what the trend is on the shorter time frame, because now what we're going to do is we're going to put pressure on the daily chart to see if it can hold. Right now, we went from an uptrend on the hourly chart to now we're, the high probability that we're reversing to a downtrend. And so as long as we stay below this line, you're going to be putting a lot of pressure on the moving averages on the higher time frames. So that's a good way to look at this. Yes, on the way up, we could see that the momentum was not very good. MACD was low, and we couldn't get ADX above 25 on these rallies. So you wanted to be on the lookout for some type of a reversal pattern. Let's go to the Qs, and I want to make sure we just discuss a specific trade setup, very similar to what I just described on the S&P chart. In this case, the Qs did break the monthly bars, but it held 300 and got a pretty good bounce. But look at the difference in the weekly chart. So on the S&P, we were talking about going to a marginal new high and then reversing back down. Look at what this did. This couldn't even get near the old high. This is a significant lower peak being made, and it's a sign that this area, the big cap tech stocks, have really continued to underperform. We're seeing a lot more strength out of more value-oriented stocks as opposed to growth-oriented stocks. And so you just kind of want to keep that in mind. The fact that we're still hanging around this 18-week moving average after the divergence on this time frame is somewhat concerning. And I would note that we're making our second higher low with the MACD below its signal line. So this is another underpinch pattern developing potentially. Now, from a longer-term standpoint, I think the ADX is probably in pretty good position, but I still think the 300 mark is really important. So 3,700 is really important for the S&P, and 300 is very important for the QQQ. And I think both of those levels are the ones you really need to be on the lookout for to see how they handle it. Because if either of those levels are broken on either of these indexes, then I think you have to be ready for something more significant in terms of downside corrective action. Let's take a look at the daily chart, because what I mentioned last time that was really bugging me was this ADX pattern. And so I said, yeah, we're getting a rally and maybe we're going to form some type of a opposing trend trigger where we kick back to the upside. But I mentioned the fact that there'd probably be upside resistance even if we did. But right now we're not doing that. We didn't even get back above the 40, or at least we couldn't close back above the 40. In fact, we got right close to it and it failed. I mentioned last week that resistance was 324. We basically got to 324.20 and reversed back down. And we're coming back down below a declining 18 on the daily chart. We've got MACD lines both below their zero line. And again, the thing that bugs me more than anything is the ADX action with the negative DI in control. So we just need to be on alert. Do I think 300 is a key level? Absolutely. So, that's probably where you have to play for this trade. Let's look at the hourly chart. Because again, you keep playing these trend line breaks until you get a 1, 2, 3. And so if I'm drawing this out for you, this is how I would view it. We had a trend line break and then a test of the high. And then we came back down through here. Again, this stuff is in my book. I definitely recommend, if you're interested in this type of analysis, I would recommend getting the book. It's $14.99 if you buy the paperback, $9.99 if you get the one that's online for Kindle. But either way, it's going to help you really kind of understand some of these concepts of how to use multiple time frames this way. And really how to use the MACD and the ADX in conjunction with them. So again, when I look at this, I say, and I mentioned last week, and let's look at the daily chart. So I said, if based on what's taking place on the daily, if we got the break to the downside and the rally up, and then the turn back down, I would definitely be considering playing this to the downside. So hopefully you guys are looking at it this way. The target would be down in this zone, down closer to 300. And it is an area. And then we're just going to have to see how it reacts there. I mean, I'm not saying that this is definitely going to hold, but I would say that, there's a pretty high probability, I think, that we want to at least go get a feel for how much support there is down there. We want to keep doing this. I also wanted to mention that, if you guys want, give me some comments as to whether you'd like to see updates on gold and oil or Bitcoin, that type of thing. I can certainly expand this a little bit and spend a little bit of time on those as well. So anyway, that's the update for the week. Please hit that like button, and we'll see you next time.